Hello there, this is fairbinaryoptions.com, and let's write here on the screen so that we know the website. So fairbinaryoptions.com, and what I would like to do here is to build a case, mind the time frame, as this is a 4-hour chart, to build a case of a bullish US dollar Swiss franc and implicitly a bearish euro US dollar. But I would specify that this is more bullish for the US dollar Swiss franc than bearish for the euro US dollar. First of all, what I would like to show you is a trend line that is broken, and not only that it's broken here, but the market now seems to form some kind of a consolidation around here, so normally it should only point towards higher level. The pattern that I would like to show you is being called the double three running. It is quite a bullish one, as it is being always followed by a third wave extension, and therefore it should only mark the end of a second wave, being a running variation of a corrective wave. Normally it looks like this. So this would be the first wave, and then you have the first correction, the first corrective wave, followed by an X wave, and then followed by a contracting triangle. In our case, this is the contracting triangle, and it goes like this: A, B, C, D, E, and then the market should go 161.8 when compared with this first wave. In terms of Elliott waves, our impulsive move starts from here, and therefore we have like what? We have the first wave, we said here, the first wave of a bigger degree. Let's say that this is in red, and then we have the first correction, so of a lower degree. If this is red, the first correction, it should be an ABC of a lower degree. Let's make it in 18 and put it in blue. Sorry for that. So this would be wave A. This would be the first wave here, we said in red. Like this. And then if this is wave A, then we should look for the B wave. And if this is the B wave, we should look for the C wave. And this is the first correction, A, B, and C. Now if this is the first correction, what we need to see and what we need to have now is an X wave. And X waves usually are going in the form of zigzags or zigzag family patterns. So anything or everything that goes from this moment of time all the way to this spike here is nothing but a corrective wave, a running corrective wave that goes before the triangular formation. And then you have the triangle, this being the B2D trend line, and this being the ANC trend line. So ANC like this, B2D like this. And now, as you can see, the B2D trend line is broken, respecting all the time elements and so forth. And this triangle should be labeled like the following. It should have wave A, the first wave to the downside. It should have the B wave all the way here, A and the B. Then the C wave, like this. The D wave, A, B, C, D, E, and this is the end of the whole pattern that we discussed. This is the end of the triangle, and also this is the end now of the second wave, as this being the first wave, as the first impulsive move. This is the end of the correction, the running correction, and now we should look for the third wave. But remember that the third wave after such a pattern comes always in 161.8 when compared with the previous first wave. So all you have to do is to go and take a Fibonacci retracement, then measure 161.8 out of this move, and then if you take the 161.8 and we take the outcome and we put it at the end of the second wave here, then we have something like 1.0060. So that is nevertheless a higher value when compared with the one that we have now. and therefore this is being called nothing but a bullish price action to follow. That being the case, I would like to buy call options, and for the expiration date, this being Friday before New Year's Eve, I would say that end of year would be a classical expiration date that is given or offered by any respectable broker. So let's write here on the screen that I am looking or buying call options with end of year expiration date for the US dollar and Swiss franc. Thank you very much for being here. This is Binary Options, fairbinaryoptions.com, and we are looking at higher levels, higher values for the US dollar and Canadian dollar. Bye bye.